Right now, we're joined by Abhay Soy, the MD and CEO at Max Healthcare Institute, to talk to us about the outlook going going forward for the company. Thank you so much, Abhay, for joining in with us this morning on ET Now. When you look at your numbers right now, double-digit growth in terms of revenues as well as EBITDA, but the bottom line, that's seen a decline on a year-on-year basis. Can you help us understand what's impacted your numbers in terms of especially the profitability this time?
No, so whilst we've had a 16% year-on-year growth in EBITDA, you've seen, sort of these kind of flat performance as far as net profit is concerned. And this is largely, if not entirely, due to higher incidence of tax. So in the previous year, our EBITDA to free cash flow translation used to be 70%, 78%. It's come down to 70%. So it's just a higher amount of tax that we're paying.
Right, very good morning to you, Mr. Soy. This is Shallow joining in the conversation, and let's put focus on your RPOP because your RPOPs have actually shown a good growth to about in the quarter gone by. Actually, how much was the push due to the price hike, and also if you could tell us what's the outlook going ahead for that particular segment or element?
So, as far as RPOP essentially is average revenue per occupied bed. So it has less to do with volumes. I mean, it has nothing to do with volumes. It's per occupied bed, irrespective of what those volumes are. But as far as the price hike is concerned, typically the price hike impact on revenue is about 2.25%. And the rest is real growth both in clinical as well as payer mix. Do keep in mind any hospital chain which has capacity constraints going forward will see a lower increment in occupancy, but a higher increment in RPOB, simply because you don't have the beds, and then you sort of prioritize the more higher end surgeries and procedures, etc., which leads to higher RPOBs, and yet because you don't have any spare capacity, occupancy is tempered.
Okay, and as the company has major capex underway, do you see any impact on margins in the next couple of years on the back of that? And since generally, when you look at it, the company sees that occupancy levels are lower for newer facilities, how does that also shape up?
So it's about 75%. It's always been above 75% every quarter of last year. And I think last many years that I can remember, it's never sort of been 74, 75% is perhaps the lowest levels that we have operated at. So depending on seasonality, it fluctuates between 74% to about 77, 78%. The new facilities, of course, are operating at about 65% occupancy levels. This is lower occupancy levels, but we expect a hockey stick growth over the next year or so as far as these the new additions are concerned. And once we've sort of put our turnaround strategy to bear, we see overall occupancy also sort of increasing. We will be coming up with new capacity in the current year. 300 beds will be operational in Dwarka the early part of June. So that should lead to further capacity and yes, further ability to ramp up as well.
Right. Mr. Soy, Max Labs has actually shown a good growth of over 20%, and this has been a consistent growth coming in from Max Labs. What are your plans about this particular segment? What are the outlook that you have on this? Also, any update on price hikes? Did the company take any high price hikes in that particular segment in the quarter gone by?
So, we have consistently seen a 25 to 27% or 28% growth, which is, year-on-year growth. And for us, it never sort of come down this number. Again, this quarter, there's been a 27% growth on a year-on-year basis as far as Q4 is concerned. We're seeing very healthy numbers in Max Lab, and, competitive intensity, as you're seeing, maybe back now wasn't there previously or was there, but, we've seen the same amount of robust growth and we continue to see.
Okay, and just lastly that we want to understand, we believe that for the expansion of the company, you all are open to inorganic opportunities as well. Any specific geography or segment that you're eyeing?
Well, there are about 21 cities where we believe at least one or two of our peers have proven viability. and we intend to go there and do it better. So those are already proven sort of charted territories for us, and that's what we're looking at, quite simply.
All right, Dr. Soy, we leave it there. Thank you so much for joining us on ET Now to talk about the quarter gone by coming in for Max Healthcare and what's the outlook going ahead for the company. That was the MD and CEO of Max Healthcare outlining the growth prospect as well as the outlook coming in for the company going ahead. But let's take a look at where the stock is right now, because yes, the entire pharma pack is under pressure in trade today. Max Healthcare also reacting to his number. There you go, holding on to the loss of about 1%. Let's take
If you like this video, then like, share and subscribe to ET Now.